Hello everyone, welcome to Bond Bytes, daily bond market highlights from INR bonds. I am Nikhil. In today market highlights, the Gsec yields cooled off from 7.45 levels seen yesterday as the CPI data came in at lower than expected levels. The CPI was reported at 7.04% and the core inflation was reported at 5.95%. In the global market space, the investors are waiting for the US CPI data, which will guide the course of Fed rate hike in this month. The NFP, that is a non-farm payroll data was better than expected. The US economy created more jobs than what market was expecting, which is a tight labor market, which will also give a Fed extra chance to go for a sharper rate hike if the inflation comes at much higher levels. The street estimates are at 8.8%, the CPI level for June 2022. However, anything above 8.8% or above 8.5% would push Fed to go for a 75 basis rate hike in the coming policy meeting. Before we go to the market highlights, please download our Quick Invest app by INR Bonds, which is available on both App Store and Play Store. As you must be aware of our curated list of bonds, which we put out in the Quick Invest, which will help you to beat inflation and as well as protect the investments against the current rate hike cycle. Do check out the app now, and do feel free to contact us at our registered mail ID and phone number given in the description below.
It was a tough journey going from an intern to a senior professional. Now, to protect my savings against high inflation and grow my wealth, I invest in bonds with INR Bonds. Download the INR Bonds app to save better.
Coming back to the market highlights, Gsec yields closed lower at 7.33%, and the Sensex and Nifty are down today, and the USD INR pair is slightly up and currently at 79.55 levels as we speak. Yesterday, the USD INR pair touched the lows of 79.75 levels. The USD is currently slightly lower than 3%. Mostly the traders are waiting for the CPI data, which is due tonight. And the domestic inflation was reported at 7.04%, and core inflation was reported at 5.95%. And IIP growth was reported at 19.6% year on year due to low base, and as well as the month on month is also showing a strong traction of 2.3%. And coming to debt mutual fund outflows, we have in the last 3 months, the mutual fund investors have been pulling out money from the fixed income securities. From April, May, and June have been the worst outflows the mutual fund industry has seen. The previous month, that outflows were recorded at 922 billion, and which was higher than the May. Thank you for listening in. Do subscribe to our YouTube channel if you have not done so.